out there that you'd like to ask the panel?
Or disagree with?
Or disagree with that?
For John and for James, can you talk a little bit about sector differences? I mean, IT is a lot faster, but when you're looking at biotech or engineering or other types of products, what's your experience been about time frame for getting things up and running and the kind of exits? They're obviously different.
Sure. Certainly on BDC's experience, my area has been specifically IT, but our life science guys, I mean, it's large dollars, it's large time frames. The company, we're probably exited the company before there's any revenue or a hint of a revenue out of the deal. It's probably either been funded by big pharma to some degree or gone public. So it's a different world, and we kid each other about how their analysis of a deal involves nothing on the top line, and it's just cash burn kind of thing. But generally, there's that area, and the rest of the rest of the gang are pretty much similar types of deals. Time frames. I've certainly over the last 10 years or so, I've certainly seen a lot more impatience on the part of investors to look at exit time frames that may be a result of LP issues or just other issues. But I know some of the biggest wins of BDC have been 10 or 12 years in the making, and it's that time frame doesn't seem to be on people's minds these days. And the world's changing awful fast in IT, so it's probably not realistic to think that. But
yeah, and thank you for asking the question, because I think it illustrates a very important distinction on strategy. So actually, I don't know if IT is faster or slower. I got some IT companies that are 8, 9 years old. And the nice thing is they have revenues and they just keep kind of going, but the problem is they keep kind of going. Like, are we going to go anywhere with this one? I think the fundamental difference, though, between what I'd call off-balance sheet R&D companies of any type, life sciences, materials science, to a certain extent energy, because you're probably not going to be generating power within the lifetime of your investment, but maybe. And something that can generate revenues and get to self-sufficiency is this choice of partner. So specifically for in life sciences and biotech, I know of 2 sets of angel investors that do life sciences investing, one in Boston and one on the West Coast, that do it exclusively and formally with the life sciences VCs around the table. It is very much a partnership, and it is not a partnership based on capital. It is a partnership based upon expertise and alignment of incentives. So the angels only put their money in when the big VCs are in, and the big VCs want to tap into the expertise and see the money on the table from the angels as validation. So it's kind of like outsourced due diligence, and I got a big brother, who, by the way, we're all part of the same organization. We're going to do a lot of deals together, so we're all going to exit gracefully and wind down gracefully, and we're going to agree to do that, as opposed to one side beating up the other. So I think whether it's the new Mass Medical Angels in Boston or Life Sciences Angels and Mass Medical Angels in Boston, by the way, has a particular model. They are not only, as I described, but they are under the umbrella and sort of informally, but very co-resident with one of our largest healthcare providers partners. So they actually have access to the laboratory network and a clinical environment that nobody else has. Life Sciences Angels in Silicon Valley, as my understanding, has all the big life sciences VCs around the table. So to me, that's just a different model, but being aware of what these capital needs are.
And that model is actually what I've been seeing predominantly kind of surface in San Francisco lately, is a lot of the angels for the due diligence, and then the VCs as kind of like the more big brother mature source of capital.
Yeah, but the con of that in things like software is, if I put $1 million or $2 million in a software company at a pre-money of, $2 million, let's say, just for argument's sake, and there's a $20 million takeout offer in 6 months, oh yeah, I'm like so gone. And a big venture firm, if I have a big venture firm as my partner, they are like, I have had my fingers shook at me and scolded. This does not even cover our management fee. We are not, exiting. And I think that's who you pick on the partner. So in life sciences, yeah, I want that big brother because really we're going for $1 billion play or not, because that's the economics of the business. I mean, maybe it's a little bit less on deployed capital, and there are some ways to manage it, but the R&D costs are just too high. In software, particularly with the cost of software, social media, mobile, all just coming down so fast, you want everyone's incentives to be aligned on exit, and so I think independence is more the model there.
Any other questions?
Andrew Stewart, angel investor, Available Energy. Question, what would be your views on when you would see it as angel investors a good time to invest in a CFO with capital markets experience and the related cost to hire such a person?
I'm sorry.
Hiring a CFO with capital market experience, when was that going to be, when do you see that being a good investment for angel capital funds?
That is one of my favorite topics. Right before your first close. So what we've done at Common Angels the past few years is we have built a bench of CFO, part-time CFOs. I strongly discourage full-time CFO hire because a small company doesn't need it and they'll underhire. And we have gotten people with public market experience, but also startup, not just big company, from inception all the way through public markets to come in. And you know what? They love working with 5 or 6 companies. They're at a stage of their career that they do that. And they are excellent. They get things started from the day one the right way. Years ago, I had these terrible experiences of when the professional CFO came in, they said, that revenue recognition you thought about, that was a bad thing. We're restating the financials of the past 3 years, and by the way, it's going to take 3 months to work through the books, and and it's just, so we bring in professional CFO part-time day 1 or day -1. We set up the audit firm day 1, all the standard financial stuff. It's never too early to do it, and there are people, at least in our community, and I would believe so in Toronto too, and in other areas, who have that sort of portfolio mentality, and if they don't exist in your area, reach out to another one. They would love to do the business, is my experience.
So I've never pushed the matter, but I was actually talking with Mark, who's a startup CFO on Twitter. He does this, and I found it interesting because every company I've invested in, that's their challenge, is that they don't need a full-time CFO, yet the maturity, having the access to that person with the experience is key. So I definitely agree, and it's something on my radar to start helping some of the companies in my portfolio to bring on board, and hopefully it's somebody like 1 for 3 companies that can bring that level of maturity to those processes.
And if my enthusiasm hasn't sold you, let me give you 2 quick points. First, your sale to the CEO is it takes them from being the producer of the financial reports to a consumer of the financial reports. Absolutely has improved performance within our portfolio to have the CEO judging the company, their own company's performance, rather than trying to justify it. 2, as an investor, that CFO for hire is probably your relationship, not the CEO's. You're not going to worry so much about money to go pay the mortgage that people didn't know about when when you have an independent CFO there. The controls issue is going to give you a lot of peace. But there are the flip side is there are a lot of people who say they're part-time CFOs, and what they are is they're just between gigs. Stay away from them. They will leave you high and dry. It's someone who's really committed. They have a portfolio of business. They've been doing it a while, and they're going to do it a while. And if they're operationally minded and can step in for the COO on any day, they're golden. These are rare birds. Keep them close.